Hello, everyone. Welcome to Short Sale Radio, where we discuss all things foreclosure. I am your host, Marco, and I'm joined once again by our guest, Gloria, who is a real estate and mortgage expert with over 19 years of experience helping homeowners navigate the pre-foreclosure space, which includes short sales and loan modifications. Now, in today's episode, we're going to specifically address the topic of loan modifications and what a lender may be looking for in the approval process. First of all, welcome to the show, Gloria.
Thank you for having me.
How are you? How are you?
I am good on this holiday weekend.
Before we get started, ladies and gentlemen, we want to encourage you to like and share and subscribe. Click that subscribe button. Help our audience to grow and share this message, this information with friends and family that you know. All right, Gloria, previously we've talked about the fact that short sales are still happening and about how many homeowners kind of run from the whole process and go bury their heads in the sand and say that this is something that isn't happening or shouldn't happen to them. Let's start today by talking about the fact that when we approach many homeowners, they are, quote unquote, working it out with their lender, which is a far cry from those who kind of shut the doors, close the blinds, and as you would say before, bury their heads in the sand. So in your experience, what kind of things may the borrower be referring to?
Well, in today's market where we are running across homeowners who are facing foreclosure with equity and without equity, some of them have approached their banks. And when we talk to them and they say, well, we're working it out with our lender, they may be referring to any one of the following situations. Okay. So if they kind of had a short-term issue and they're working, or, they may have gotten laid off and they're back to work, whatever the case may be, if they have some form of income, then they may be going into a repayment plan, which allows the borrower to catch up on the missed payments, and the banks will set that up over a set period of time. Okay, all right. So another thing that they may be referring to is something called a forbearance agreement. And what this does, it allows the borrower to temporarily suspend or reduce their mortgage payment due to a short-term financial hardship. So it kind of suspends everything. The bank is not going to pursue any legal action against them, but keep in mind those payments, interest, attorney's fees and all of those things are still accruing. Okay. All right. A short sale is another thing that the homeowner may be referring to, and they may actually be working on this with another realtor. Okay. And again, we've discussed this before, but if the homeowner owes more than the house is worth, then the borrower is able to sell that property for less than what is owed on the mortgage, and the lender will agree in writing to accept the proceeds as payment in full. All right. Another thing, depending on what stage of foreclosure they are in, they may have worked out what's called a deed in lieu of foreclosure, which means we call it walking away. And they voluntarily say, hey, I'm just going to walk away, and they transfer ownership of the property to the lender in exchange for cancellation of the mortgage. There are some things that the lender is going to require them to do, like leave the house in good condition. And, it just depends from one lender to the next what a deed in foreclosure would look like. But it's basically the homeowner walking away voluntarily. Then there's the loan modification, which is something that most homeowners, this is what they're mostly referring to. And what a loan modification is where the lender will agree to modify the original terms of the mortgage in order to resolve a mortgage delinquency and bring the loan current, and with the goal of making that mortgage more affordable to the borrower, etc., etc.
Okay. Now that seems to be specifically what I would imagine most homeowners would pursue. Also, I wasn't familiar about the deed in lieu of foreclosure. We can save that for another time. But let's dig deeply, more specifically about the loan modifications. Let's talk about the specifics. What is a loan modification? What will it do for the borrower?
Okay. Well, loan modifications are designed to help the borrower who's struggling to make their current mortgage payment. And it's going to modify the terms of the loan, such as the interest rate or the length of the loan. Okay, so the lender is going to agree and the borrower are going to all agree in writing to modify that existing loan. Just a interesting note, something that I have seen that FHA is doing recently is that they are doing something called a 40-year loan, which is going to extend a 30-year mortgage to 40 years. And what I believe the goal of that is to make that payment more affordable, because usually if you take what's owed and put it on the back of the mortgage, and the mortgage term hasn't changed, it means that unless they do something with the interest rate, the payment is going to increase, which I never understood that concept, because if I can't afford, if I'm a homeowner and I can't afford $1,500 a month and you modify my loan and the terms come out with $1,800 a month, that kind of defeats the purpose. So I think the whole goal of them doing the 40-year FHA, extending that mortgage term to 40 years is with that goal in mind of keeping that payment in line with something that the borrower can actually realistically pay.
All right. Now that makes sense. Now, I'm a little curious here. It seems to me that the lender and borrower agreeing in writing to modify the existing loan, that means that there's a lot of things that are involved, a lot of moving parts here, specifically paperwork. You know, what are lenders looking for when they review paperwork? You know, a borrower can submit information to their lender to get approved for a loan modification. So I know that it's not just done with a phone call and then bam, it's done. I'm sure that there's a process involved here.
There absolutely is. So first and foremost, the homeowner is going to have to provide evidence that they have a qualifying financial hardship, such as a job loss, illness, unexpected expenses, and those types of things. And then the lender is going to evaluate that hardship based on the fact that the homeowner is currently delinquent and that they're facing what's called an imminent default. For example, in situations where a primary, the earner, the primary person who is on that loan passes away. So therefore, you know, that the current homeowner who's still in the house, you know, can basically state with certainty that those future payments are not going to be made on time. So the remaining borrower on the loan may need to modify the payment in order to continue to pay that loan.
Okay, that makes a lot of sense. Okay, so we know death, of course, of a primary earner. That's a major factor, major issue. But what other factors are there that lenders can consider for a loan modification? Okay,
so after they have resolved that the home is, that the loan is in a state of delinquency, and that there is a qualifying hardship, now the lenders are going to want to see that they have evidence, that there is some evidence of the borrower's ability to pay in the form of income, pay stubs, some form of consistent and stable income. And they're going to want to see evidence of that. They're going to want to review bank statements and tax returns. It's similar to the paperwork that a homeowner, to some degree, needed to provide in order to get approved for the mortgage. They're going to have their back-end underwriters taking a look at a financial picture so that they can make a determination based on their internal calculations whether or not this loan modification is going to be feasible according to their income, expenses, and things of that nature to keep that homeowner in place. Does that make sense?
That makes a lot of sense.
Okay.
Now, in a situation like this, though, with them providing financials, what about credit? Is credit a factor? Credit score, or perhaps even their payment history on the loan prior to the modification?
Well, one thing we do know is that once you go delinquent on a mortgage, it's going to dip your credit scores. So they're not necessarily looking for credit as the deciding factor for the loan modification. But what they will be looking for is if you're filling out a financial worksheet, which is required with a loan modification, they want to make sure that when you're stating that this is the list of debts that I owe, they're going to line that up with your credit report. They're also going to be looking to see, are you out buying a new car and you're out running up credit cards or applying for new credit, things of that nature. So they're going to be looking to see some level of financial responsibility. And they're also going to make sure that the paperwork, because when you submit that financial paperwork, they're going to have to prove every part of that. And they're going to use the credit report to line those that financial statement up with what's on your credit.
So credit card debt could be a deciding factor, but not specifically.
It's not a deciding factor. It could be a tipping point if you say that I don't owe any credit card debt, and they pull your credit report and they see a very heavy debt load. Then that's going to factor into what's called your debt to income. Okay. Because if your debt load and your income, if those ratios are out of balance, which means it basically tells them that even if they modify the loan, you're in so much debt. If they add the mortgage payment on top, you may not qualify for a loan modification because you're not making enough income to cover the mortgage and all of your credit card debt. Okay. So that's how it could negatively or adversely affect you getting approved for a loan modification.
All right. So it's always amazing to think about how we can kind of ignore how important it is about credit card debt. What about medical bills? I mean, medical bills, is there a part of that as well? They're
not necessarily looking at I know that there are some new laws and regulations. The only reason why they're going to be looking at anything that's medically related, if that is the hardship that you have presented, they may want to see some form of proof that you have a hardship based on your health. Okay. Now, to what constitutes something that you can legally send your lender, that's something that the lender will, have to advise the homeowner with, because I know that there's some, obviously disclosure related issues when it comes to your health and the things. But medical debt is not going to affect you when it comes to getting approved for a loan modification.
Okay. All right. So let's kind of switch gears here a little bit. Let's get into the specifics. Because as I said at the top of the broadcast, a loan modification is not something that a borrower can just pick up the phone, talk to the lender, and boom, it happens today. There's a lot of moving parts. There's a lot of things involved. And I'm sure one of the most specific things has to do with the paperwork itself. So what can borrowers do to make sure that their paperwork is in order and meeting the lender's requirements?
Yes, the paperwork is definitely what is going to make or break the success of the loan modification. One of the most important things is to be honest and transparent about your financial situation. So the borrowers, like I said before, they're going to have to provide all of the necessary documentation. The lender is going to have a list of things that they require. If it says we require items 1 through 8, send them items 1 through 8. Yes, the lenders, they have to document on paper. And so if they ask you for a financial statement, if they ask you for your pay stubs, my advice is to get everything together all at one time. Don't piecemeal it to the lender, because that's going to cause delays. So if you're able to get all of your paperwork together at one time, put it in order, mail a copy to the lender, then fax a copy to the lender. I suggest writing your loan number on every single piece of paper that has to do with your, this may be old school, but I still think that, it's a good idea to make sure that your loan number is on every piece of paper. Make sure that your signatures are there where needed, that the dates are there where needed. And I can't say this strong enough, is to submit a fully complete package with everything all at once. Because if you do not, that package goes over. Some of the frontline people may review it to see if the package is complete. If it is not, it gets pushed to the side and they will attend to the next person in line. And then, so now you're having to call, well, why, I haven't heard anything back. And, I will say this, the banks are not the most organized. And so you kind of have to help them to help you. So if you're organized, then at least they can have all of your information to review it quickly, because believe me, the clock is ticking. While you're doing the loan modification, the foreclosure process
still moving along.
Is still something that, if they don't hear back, if you just take a 30-day break, say, oh, this is stressful, I'm not going to send this, or it takes you that long to put all that paperwork together, the lender still has to move forward with the foreclosure. So, some lenders, most lenders, things vary from lender to lender. They may stop the foreclosure in advance of anticipating your paperwork coming. But if you don't send your paperwork by a certain time, then they're going to just move you to the next phase of the foreclosure. So, again, to recap, send everything at once, review the package, call with questions, send everything at once, don't piecemeal it, and send it yesterday.
And of course, we're talking about and discussing all things foreclosure, but today specifically the subject of loan modifications. Now, you've given us great advice here about what to do, if you're looking for or pursuing a loan modification. What do you do should your situation change? Let's say you're the borrower, you're pursuing a loan modification, but now you've got some good news. Maybe something happened or what have you, or even there might have been a situation that may have exacerbated the need for a loan modification. What about that? What do you do if your situation changes during this entire process?
Communication is everything. So if your situation changes, you get a new job, you have a change income, you have more income, they should notify the lender as soon as possible. So this is just going to make sure that the loan modification terms are still appropriate and affordable. So okay. If your change is something in the negative, like your income decreases, same situation. Notify your lender, be upfront with it. Don't hide from this. This is not going away, and let the chips fall where they may, and see what the lender can work out. Because at least with the loan modification, you do have to have income. Some form of income. And so see what programs the lender may have to be able to help you in that situation.
Now, that kind of brings us to another point here. We're talking about maybe someone that lost some income or whatever the case may be, so they need to have the loan modified. So why would a lender even consider a modification for someone who might be facing foreclosure if they have demonstrated that they lack the ability to pay the mortgage in the first place?
Well, one thing about it is lenders are not in the business of owning homes. So they are going to try to help you. If they can demonstrate it, then it goes back to what I said before. If a homeowner is just not going to just randomly stop paying their mortgage, there's something that happened. And so what that something is going to vary from person to person. And so the loan, it's going to boil down to what type of paperwork can you provide to prove your situation. And so unexpected things come up, like the pandemic came up and there was all type of loan modifications. After the pandemic, people are getting sick. There's loss of job, loss of health, loss of life. And so again, if the homeowner can demonstrate that, hey, I had the situation, and I am now, back on track, the lender is going to prefer that loan modification over the expense and hassle of a foreclosure.
Okay.
So one thing about it, though, lenders and banks, they are not obligated to accept a loan modification, and they are going to deny your loan modification if the borrower is unemployed and the likelihood of the loan going back into default is very high. Right. Okay. And so if your lender, if they've already started the foreclosure process, then that loan modification may not automatically stop the proceedings because the homeowner may have just waited too late. It's too far in the game. And that's going to depend on from lender to lender. I'm not offering any legal advice here. I'm just telling you what we have seen in the past.
Okay.
And so what we have seen is that a lot of homeowners who have no job, no source of income, they're going to submit a loan modification kind of as a Hail Mary attempt to prevent or prolong the inevitable foreclosure. For example, when you may not have a job and all of a sudden you're submitting paperwork for a loan modification, what it does is because the banks, you're not their only homeowner, it's going to send that file into a delay of up to 90 days or more. And sometimes the homeowners do this because they're in the hopes that they can somehow get a new job in the next 90 days, make up the past due, get a loan from someone. However, we've seen a lot of homeowners end up being foreclosed because they stall with no solid means of ever making the mortgage payment on the loan or either getting a loan modification put in place.
Wow.
Yeah, so this is when the homeowner should consider a normal sale, because in this particular market, there are homeowners who are sitting on lots of equity or a short sale, whichever one applies. And so one thing to note here is that over time, a homeowner can unfortunately, a lot of them that get kind of used to not making any housing related payments. And we have seen that this sometimes causes a little bit of resentment towards the lender, a sense of fear, and even a reluctance to ever make those payments ever again, because they've gotten kind of used to, like there's this, all of a sudden, this free flowing, money flowing through the house. That's not to say that all of them are that way, but we've seen a lot of different scenarios with homeowners with regards to trying to put a loan mod in place, not having the income to put a loan mod in place, using the loan modification as a strategy and a tactic to stall. And we've seen a lot and we've done a lot in this market.
Wow, it's very eye-opening indeed. Wow, thank you for sharing all this great information with us. Friends, remember, if you are considering a loan modification, it is our hope and prayer that you seek legal expert counsel on the matter. Now, all mortgage situations are unique, so you should always speak to an accountant or financial advisor about the options that you may have. And remember that our background is as realtors, mortgage underwriters, and homeowners who have previously faced foreclosure ourselves during the mortgage meltdown. So we are not, I repeat, not offering financial advice here, but merely sharing our experience and widely publicized information. Gloria, great information that you shared with us today. Thank you so much for sharing your insights on what lenders look for when they're reviewing a borrower's paperwork for a loan modification. We really, really appreciate that today.
Oh, awesome. Thank you for having me. It was a pleasure to be here.
And ladies and gentlemen, once again, we encourage you that you like, share, subscribe, click the subscribe button, share this with family and friends. You may have someone you know who is in a situation like that, and you never know, we may be able to offer them the kind of assistance that they need. All right. Now, thank you again for joining us today. And before we end the show, as we like to do, we always want to encourage you. We want everyone to remember these words of encouragement. It comes from Psalm 34, verses 17 and 18. It says this about you. It says, quote, "The righteous cry out, and the Lord hears them. He delivers them from all their troubles. The Lord is close to the brokenhearted and saves those who are crushed in spirit." Yes, indeed. Hey, ladies and gentlemen, thanks again for tuning in to today's episode of Short Sale Radio featuring the Short Sale Strategist. Once again, go to the website, which is the shortsalestrategist.com. homeowners.com. And here on this particular channel, be sure to like and subscribe so you don't miss any future episodes. And if you have any questions or topics maybe that you think we can discuss and you'd like us to cover those, feel free to reach out to us on social media. All right. Hey, you're listening to Short Sale Radio. Thank you for listening. And until next time, God bless.